and welcome back. You're watching the Tip TV Mining Show in association with Blytheway and Bear. It's a miserable and rainy day here today in London, as kindly demonstrated by Charlie.
I don't know what you're talking about. Thank you very much.
However, here to brighten the day with some excellent news, we have Maurice Mason, who's Vice President of Corporate Development and Investor Relations at Caledonia Mining. Welcome, Maurice.
Thank you. I brought an umbrella and
that's where I went wrong.
dry.
You see, if only someone had told me this morning, bring an umbrella.
Can you start by giving us an update on Caledonia?
Yes, thank you. We announced production numbers yesterday for the full year 2016. It was a production record for the business, just over 50,000 ounces, which we're enormously proud of. A fantastic performance from the mine. It was a quarterly production record for the quarter. It was 13,600 ounces for quarter 4, and also an annual production record of 50,000 ounces, which is part of our development plan to invest to grow the business. We produced 42,000 in 2015, 50,000 last year. And it's all part of our investment plan, which is on track to grow the business to 80,000 ounces by 2021. So a good year. We're proud of it.
So you've do a quick bit of maths. You produced 13,000 in the fourth quarter.
13.6.
13.6. All right. So if I multiply that by 4, I get 54. But you're going for 60 next year, or sorry, this year, 2017.
Yes.
So how are you going to? You've already had a record quarter, so you're going to have another sort of 4 record quarters and more going forward. Explain a little bit how you're going to do it.
That's right. We are so we invested in a new mill at the mine, which was commissioned late last year. So was ramping up production in quarter 4. So we're in the process of increasing production from a milling capacity point of view. So we grew from about just over 10,000 ounces produced in the first quarter of 2016. Up to 13.6, so there's a steady increase from a quarterly basis, and that increase is likely to continue quarterly throughout the year. It'll be helped by the new mill, which will increase milling capacity, and that's bedding down as we speak. We are expecting some grade improvements as we continue to develop and improve underground flexibility, which has been a challenge for us in the past, but as we improve that flexibility underground, we'll be able to maintain grade where we need it to be in the operation. We'll get a little bit out of improved recovery for the business as well, in terms of additional oxygen plant and the incremental investment there. So yes, it will be another record year, 20% growth. So we'll have to go some from an increase in capacity, but we have good people running the mine, and we're confident they'll achieve that for us.
So Maurice, I know it's difficult to give this sort of granularity by quarters. But if I take the 60,000 you're looking for 2017, that would be 15,000 a quarter. Should we expect to see that, or is it going to be lower earlier on and higher later on?
No, you will see a gradual increase quarter on quarter. So we will be below 15,000 in quarter 1, and we'll be slightly above 15,000 in quarter 4. The mine is on a gradual growth trajectory. We did 42 in 2015. 50,000 in 2016, we're targeting 60,000 this year and growing eventually to 80,000 ounces in 2021. So it is part of a steady incremental improvement in production, and you're likely to see that quarter by quarter this year.
So what's the figure for 2018? Is there a I know it won't be a set in stone figure, but
it's not guided.
Yeah.
We're looking at 65,000 ounces for 67,000 ounces. Apologies, for 2018.
Okay.
So a reasonable increase again from this year's guidance. But again, that's not formal guidance. That's just in terms of our production plan. We have.
But that would be 17,000 a quarter. So I guess you're looking at sort of between 16 and 17 for Q4 this year.
I would think
those sorts of numbers.
That sort of number. I would think, yes.
And on the cost side?
Costs were 960 for quarters 1 to 3 in 2016, which is the only numbers we have out in the public domain. Costs are continuing to trend downwards gradually. Our guidance for this year on an all-in basis, that the number I gave you, that 960, was an all-in cost number, all-in sustaining cost. Our guidance is for the 60,000 ounces between 810 and 850. So we are likely to see the fixed cost component of the mine spread over a larger number of ounces, and that gives us a dilutive effect of increased volume. So over the lifetime of the expansion, when we get to 80,000 ounces, we're expecting all-in sustaining costs to be in the neighbourhood of $750 an ounce.
Which would give you on a gold price of 1,200, that would give you What's that, a $450 margin?
It would. It would give us, at an EBITDA margin level, $450 an ounce, 80,000 ounces. We don't own the entire business. We have 49% stake, and the ownership structure is relatively complex in terms of the repayment of shareholder loans and facilitation loans to Caledonia in terms of to put the indigenisation structures in place. But the maths does get pretty overwhelming when you work out 80,000 ounces at that sort of EBITDA margin. It's good numbers.
But we can at least say, that's what you're targeting in the 2021. You said
if the gold price stays where it is,
arguing those sort of metrics. I mean, who knows? The gold price may be higher. You touched on this, so I don't think no conversation would be complete. But tell us a little bit about operating in Zimbabwe. Obviously, tracks a reasonable amount of press in this country and overseas, and it's not always that positive. But how do you find it?
It does attract some questions. We get quite a few shareholder queries on operating in Zimbabwe. We find we have everything we need there to operate a mine. We have grid power, we have water, we have well qualified and competent people. There's tarred roads all the way up to the mine gate from Bulawayo. We're an hour's flight from Johannesburg. We can get critical spares on the back of a truck and have them at the mine in 18 hours, and we've done that if we need them from Johannesburg. We handle our own logistics. So all in all, we're quite happy operating there. We have had some issues with electricity supply, for example, not in terms of power cuts, but in terms of reliability of supply and power spikes. We are investing money to remedy that, and we're working with ZESA, the local electricity utility. They have been helpful in terms of partnering with us and trying to sort those power supply issues out. So that's part of running.
Does that add a cost to you if you've got a fluctuating electricity supply?
Yes, it does. So it does have implications for the reliability of our plant, and that does it can affect production. We still achieved our record last year, so we're managing it, and it's part of running a mine. So things never go exactly as you plan. So broadly speaking, we're quite comfortable operating in Zimbabwe. We have everything we need. We've been paying a dividend back to our shareholders now for years, and the source of that dividend comes from Zimbabwe. That's our only asset. So it's a fine place to do business for us, and we're quite comfortable operating there.
I suppose two other things following from. Can I ask you about the Zimbabwe dollar? Which obviously, because a lot of the advantages or the advances that I think you're alluding to, the Zimbabwe government dollarized the economy a few years ago, and that seemed to, in some ways, revolutionise its terms of trade, and it bought in a lot of dollar goods. Suddenly the supermarkets, which were empty, were then full. So I imagine that has helped you with your procurement process. In the last few months, I have noticed rumblings of people flying kites suggesting there might be a return to the Zim dollar. Have you heard that?
There has been issuance of bond notes by the Zimbabwe Reserve Bank, which effectively function as a currency within the country. They have no impact on our business. We continue to get paid in US dollars and have done for quite some time. In fact, we issued a press release to that effect on our website late last year, which effectively we continue to get paid within 24 hours of delivering our gold to the Zimbabwean Reserve Bank, and it's an arrangement that works very effectively for us. So the bond notes are there. They've been issued by the Reserve Bank. They seem to be circulating within the country, but they have no effect on our business, and we therefore aren't concerned about them.
There is a bigger picture here, isn't there? In terms of the development plan, you do have this big development plan. Where are you, if you can put it in percentage terms, from the start of the plan to its final sort of execution? How far along the track are you? Where are you? How's it going? How you experience it?
We're about halfway, Charlie. It's probably halfway in terms of the amount of money we've invested. So we're investing about $70 million in a brand new shaft, upgrading the plant to the new mill that I mentioned, increasing production capacity. We're building a new shaft from surface down to 1,000 meters, 1050 meters for production. That shaft is now at, I think, 534 meters. We announced at the end of last year. So we're halfway in terms of depth, capacity improvement, in terms of 60,000 ounce target for this year. So yeah, we're about halfway along the investment plan, and it's so far progressing well. Because
I think it'd be fair to say that the real jam or the extra jam for for investors is when that process is finished and you've got all the development in place, and then you have maximum flexibility, you have access to the ore blocks you want, and that's when the mine really sings.
Yes, that's correct.
And is that 2021? Is that
2021 is when we hit 80,000 ounces.
Right.
We will be doing very nicely even this year on 60,000 ounces. If gold prices stay where they are today, we'll do very well. And bear in mind also that the capital tails off fairly quickly. So whilst the production ramps up towards 2021, the capital moves down. So we're passing that inflection point. We're targeting spending $18 million this year, but that capital expenditure drops off quite substantially in 2018 and 2019. So the production will be growing into a diminishing capital expenditure profile, which will mean from a
so the sweet spot is capital going down, production is 2020, 2021 about then?
This is the crest of the hill right now. So
in terms of the expenditure,
yes.
The sweet spot in terms of returns to shareholders is what I'm thinking.
Is probably 2 years away.
Right.
When the money will be spent and we'll be reaping the rewards of that investment.
And of course, we are very generous with the dividend.
It's 4% yield. So for an AIM-listed gold miner, we think that's a very good yield with the kind of growth profile we have. Yeah, we're very happy with that.
Brilliant. Well, I believe that's all we have time for today. But Maurice, as ever, thank you very much for joining us here, and we look forward to having you back again soon.
Thank you
Very much. We will see you again next week.